Hey folks, Kevin here. I want to talk about stop loss orders. They're a tool for controlling or managing your risk. So, what is a stop loss? It's an order that you place to sell a security when it reaches a certain price below where it is now. It's designed to limit your losses. So, why would you sell at a loss? The short answer is to control your risk. Yes, you want to buy low and sell high, but you also want to remember the old market adage, your first loss is your best loss. So if you want to control that risk and you don't want to ride out a lot of volatility, or maybe you don't have a very high risk tolerance, stop losses are something to consider to stay in the market but not take full 100% market risk. Little disclaimer, they cannot be used with mutual funds. They can only be used with individual stocks or exchange traded funds. So a little example, you own 100 shares of XYZ stock, hypothetical stock, currently trading at $45. You can place a stop below that to sell automatically once that price is reached. Now the execution price might be not exactly where you put the stop. Let's say you put the stop at 43.95. It may sell a few cents lower or higher than that, or several cents lower than that, but at least you'll be pretty close to that price that you set. Let's say that this chart is your XYZ stock and you bought it somewhere up here in this range on the left-hand upper corner. If you set your stop, let's say a little bit below the 50-day moving average, that's this blue sloping line that looks like two hills right here. And this is the movement of your stock, this jagged movement right here. If you set your stop right here at this price, whatever that price is, it's going to sell right around that price, and you avoid all of these gyrations, all this volatility. You can still buy it back. Just because you sold it doesn't mean you can't buy it back anywhere in here. And you've missed out on a whole lot of volatility and a whole lot of downswing in that price. Or let's say you put it here and the stock comes down, but then bounces back and keeps going higher. Well, you can raise your stops. You can just move them up so that you don't lose your profits. So the risk of this is if you put your top stops in too tight, you can sell out and then miss out on the rebound. So there is some upside risk to this. You're really just protecting against downside risk to some extent. Thanks for watching. I just want to introduce you to stop losses. If you have any questions or you want to go more into detail, be sure to give me a call.